Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Abercrombie Fitch's latest quarterly report, the kind of report that might put you to sleep. But trust me, there are some interesting things happening behind those classic logos. A quick summary, A&F sales are up but profits are down. What's causing this? Are they losing their edge? Is inflation kicking their behind? What are they doing about it? We will explain. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more discussion. Okay, so this report is for the quarter that ended May 3, 2025. It's basically a snapshot of how the company performed financially during those 3 months. Let's get into it. Here's the headline, net income, that's their profit, is down. They made $4 million compared to $13 in time last year. That's quite a drop. 30 million, 3 customers just disappeared-ish. Net sales, that's the total money they brought in from sales, actually increased. They made $20 billion last year. Not bad, right? Revenue and profits moving in opposite directions. This means that costs are increasing faster than sales. Earnings per share also took a hit, going down from $2.14 to $1.59. This reflects the profit dip we just talked about, and it means that each share of Abercrombie & Fitch is earning less money. Let's jump to the balance sheet, which shows what the company owns and owes. One important change. Accounts payable decreased from about $364 million to $296 million. It is likely that they are managing cash flows more tightly. Now, let's move to the statement of stockholders' equity, which summarizes activity in the owner's portion of the balance sheet. This shows that the company repurchased a significant amount of their own stock, worth $200, yes, $15 million. The statement of cash flows tells us where the company's cash came from and went. Here's a critical point. Cash from operating activities, that's cash from their everyday business, went negative. Last year they made $95 million from operations this quarter, but this time around they lost $4 million. They paid just under $10 million in income taxes compared to $8.4 million the year before. More taxes usually mean higher profits, so where's the cash at? So what does Abercrombie & Fitch actually do? The filing reminds us that they are a global, digitally led omnichannel retailer selling clothes and accessories. They operate in the Americas, Europe, and Asia Pacific through brands like Abercrombie and Hollister. Okay, let's take a look at some rules that might affect how they report their numbers. There's a new rule about disclosing more details on income taxes and another about breaking down expenses. These will mean they have to be more transparent about where their money is going. Here's an interesting detail. Abercrombie & Fitch uses what's called a supply chain finance program. Basically, they allow their suppliers to get paid early by a bank who then gets paid by A&F later. This might help A&F manage their cash flow, but it's important to know that as of May, they owed 43 grand. It's a way of pushing out payment deadlines or something like that. Let's talk about how they recognize revenue. That is when they count a sale as real. They sell gift cards and have loyalty programs which create liabilities. Basically promises to give you stuff in the future. The value of unredeemed gift cards is about $39 million. This section is about earnings per share, which we already discussed. It does give details about shares and dilution and stuff like that. Not too exciting, so we will move on. This part goes into detail on how they value their assets, like cash and investments. They use a 3-level system depending on how easy it is to find a market price. Most of their assets fall into level 1 or 2, meaning they're pretty easy to value. They say they had about $158 million in assets that are measured on a recurring basis. This section shows what they own in terms of physical assets like buildings and equipment, minus what those things have depreciated. These totaled about $606 million. Because of how they account for leases, Abercrombie & Fitch reports a big chunk of assets and liabilities related to their store leases. They also estimate having $133 million worth of new leases not yet commenced. This talks about times where the value of their assets went down due to store closures, for example. They are taking charges for about $679,000 in these store impairment losses, mostly in the Asia Pacific region, which might signal stores are not doing so well in that area. Income taxes are complex. The company estimates their annual effective tax rate, but it can change a lot depending on where they're making money, tax laws, and other factors. They have a credit line of $500 million, but they have to keep some available. So their actual available borrowing capacity is about $429 million. This section is about how they compensate employees with company stock. It costs them money, but it's also a way to get people invested in the company's success. It's approximately $10 million this quarter. Here we see details about how they use things like forward contracts to manage currency risk. Foreign currency risk could be a big risk given they work globally. This accumulated other comprehensive loss, or AOCL, I know it's quite a mouthful, shows some gains and losses from foreign currency stuff. Alright, this is where things get interesting. We see the breakdown of sales by geographic region, the Americas, Europe, and Asia Pacific. The Americas still makes up the bulk of their business, but a worrying trend is that EMEA and APAC, that is Europe and Asia, are not profitable. This talks about non-cash deals and also about lease payments. It's about how the company spends its cash. So what's the management team saying about all this? It seems like they are focused on these areas: growth, digital revolution, and operating efficiency. This section talks about the market risks, mostly focused on currency risks and how they are handling that through stuff like hedging. It sounds boring, but this section's important. It says that they have reasonable assurance that their financial reporting is accurate. Legal stuff. The company mentions lawsuits and other proceedings, but says they can't estimate the possible losses beyond what they've already set aside. The key risks for Abercrombie and Fitch haven't changed much. These are things like trade wars, economic problems, not keeping up with fashion trends, and of course cyber attack. Finally, they report about not modifying any previous Rule 10b5-1 trading arrangement during the reported quarter, which is something about regulations for trading company stock. Now, let's step back and look at the big picture. Abercrombie & Fitch increased revenue, which is good, but their profits are down. Costs are going up faster than sales. It seems they are facing challenges managing those costs and handling the impacts of things, like changes to trade agreements. Here's what I noticed. The Americas still carries the business, but profits they are falling. Europe and Asia are not profitable on the other hand. They talk about their strategic focus and all these initiatives. But are they working? You tell me. A&F needs to cut costs more effectively. If you can't control the costs and keep the quality the same, customers just won't return. Alright, that's our breakdown of Abercrombie & Fitch's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for even more discussion. Thanks for watching and see you next time.